everyone. Welcome back to another episode of 5x5 with CompStak. My name's Brian Caldwell. We've got an exciting episode today where we'll take a look at the Phoenix industrial real estate market. Today's guest is Josh Wyss from Cushman and Wakefield, and we'll hear from Josh on some market trends and some other factors in the economy that are impacting the industrial commercial real estate in and around Phoenix and the greater Southwest. But first, we're going to start with our pulse check from CompStak's data, insights that we've pulled from our crowdsourced data from our many users across the country on the Phoenix industrial market. Starting with the leasing surge, so Phoenix industrial leasing volume hit 6.5 million square feet in the second quarter of this year, which is a 42% jump quarter over quarter and a 53% jump year over year. Comparing Phoenix to the Inland Empire, two very popular and notable West Coast industrial markets, Phoenix industrial rents have actually overtaken the Inland Empire in some quarters, a major shift after trailing during the 2021 and 2022 boom. Looking at concessions, free rent periods as a share of lease term are up 140 basis points since mid-2023, but that's actually only in properties built after 2010, so only in new properties. And lastly, we'll compare a little bit about heavy industrial and light industrial. Since 2020, heavy industrial rents have averaged 19% higher than light industrial, though both have pulled back since their recent peaks. So Josh, thanks for joining us today. Welcome to the podcast. So we'd love to hear your expertise on your market and your property type. And why don't you start with telling us a little bit about some headwinds or tailwinds that you're seeing in the market?
Absolutely, Brian. I'm happy to be with you. Thank you for inviting me to join in this conversation. I've worked in the Phoenix market now for a little over 24 years. And so we've seen some dynamic shifts in that time. Some of these are going to be the same tailwinds and headwinds that we've seen for the entirety of my career. But as far as the tailwinds, one of those things that has been consistent is that Arizona in general has been a very business-friendly climate. It's welcoming, obviously, for population growth, but we've got open arms for new industry as well. Along with that, its Sunbelt location and proximity to the port have made this a place where both logistics and manufacturing companies, again, along with those residents that are employed in those facilities, find themselves right at home. And then a newer tailwind that we have, and this is the two sides of the coin scenario, is we've got a lot of high quality availability. That abundance of availability provides a lot less risk that a facility that a client might be interested in would be taken by somebody else. And that is, I'm working on a couple of projects right now where that's actually going to prove to be very helpful. That abundance of supply can be so much that sometimes making the short list is one of those challenges. And so that's one of the headwinds really is from the developer side of the equation is there is a lot of supply out there. And so one of the questions that is being asked regularly is how do I position myself to be the winner? That's 6.5 million square feet of new leasing. That is real activity, but that's not the absorption number. And that's the thing that really will be ticking down over time. Not ticking down as far as the amount of absorption, but really on those availabilities. It's a slow grind in a lot of ways. One of the other headwinds, and I'm sure just about everybody listening to this thinks of it when they think of Arizona, but that is that we're a desert state. Not a lot of rainfall here, which is one of the things that drives a lot of people to move here, right? There's a lot of certainty in that weather, a lot of sunshine. However, there's very much a narrative that water is not a certainty here in the Phoenix market and Arizona at large. And then another headwind that we're facing along with the rest of the country is going to be that tariff uncertainty that everybody really is feeling now.
Yeah. Yeah. We're hearing that a lot all over the country, as you said. And that's definitely been a hot topic in the news. And seems like, the wind changes direction on tariffs week to week with the folks running the show. But great. So in terms of tailwinds, we've got business-friendly environment. We've got availability of prime industrial real estate, and we've got proximity to the Port of Los Angeles. Is that what you mentioned?
Yes. Yep.
Yeah. Let's talk a little bit more about your outlook here coming up in the next, call it 6, 12, and 24 months, if you will.
Yeah. So we envision a lot of continued leasing activity here. The Phoenix market has developed a resiliency that didn't exist 24 years ago when I started my career. And so we think we're a little less prone to some of the highs and lows, and that in the next 6 to 12 months, we'll just kind of see this continued consistent absorption and leasing activity. Doesn't mean that it's going to be a straight line, but we would foresee it being positive. One of the other things that is interesting, we talked a lot about the available supply, and that is really starting to wane in the larger footprint facilities. A lot of these are spec projects in excess of 500,000 square feet, sometimes 1 million square feet or more. The vacancy for those projects is nearing zero. There's very few options for those considering that size range. And so even though the vacancy rate for the market in large may not indicate that it's time for additional spec construction, there's a number of projects that are working towards breaking ground here in the third and fourth quarter of 2025.
And then, let's take a look at your biggest surprise in the market. If you look back over the past few years, what are you most surprised about as we sit here today in the Phoenix industrial market?
Well, one of those is actually a little counterintuitive when you talk about that narrative on water. And a lot of progress has been made in this regard, but Phoenix has really sprung up as a major player in the data center market. There's been a ton of projects, both announced, acquisitions made, and completed facilities, all targeting that data center world. A lot of that, I think, is targeted around the fact that the climate risk for those data centers, we are generally somewhat immune to natural disasters. We don't have tornadoes, we don't have earthquakes, and that's something that allows us to have the real reliable power grid that a data center is dependent upon. However, historically, they've also needed a large amount of water. And so that's where, again, I would consider that kind of unexpected and a surprise. A lot of developments have changed the requirements there, allowing, maybe less public outcry when it comes to the data center world. But that's something that's been a surprise. Another thing, and maybe nationally it's gotten some headlines, but the TSMC, Taiwan Semiconductor, announced several years ago a very large-scale project in North Phoenix. And that was, and it will be, transformational for that market. However, just the length of time that some of those big projects take and how long-term the impact is something that has surprised me a bit.
Yep. Development and major projects definitely are on an extended timeline for, us everyday folks that are doing business day to day. So I'm just thinking of in Georgia here where I'm at Plant Vogtle, which has been a national conversation, especially in the data center world too. It's a nuclear power plant that was well over budget and well behind schedule and kind of seemed to drag on forever. So the timelines of these things delivering that have major impact on what we do in commercial real estate and the business world can kind of take some time. Great. So yeah, lastly, let's take a look at your regional expertise in and around the Phoenix markets and other Southwest markets that you may cover or do business in.
Absolutely. So I alluded to it previously that there's been some changes in Phoenix over the longevity of my career. One of those is that Phoenix as a whole used to be very, very dependent on the housing industry and that population growth. When we saw the Great Recession happen, property values plummeted. And I know that happened everywhere, but it was particularly gruesome in Phoenix because that continued expansion of the housing market was the major driver for Metro Phoenix commercial real estate, or not commercial real estate, but industrial real estate. And thankfully, through projects like I've mentioned already, some of those data centers, the TSMC project, we've got LG doing a large-scale battery plant, Lucid Motors, if you're familiar with them, they're located about 45 minutes outside of the Metro Phoenix area building cars. And so there's been a lot more resiliency here in the Metro Phoenix market that has, provided just the stability and the positive outlook that I have on the market. Additionally, it's actually changed in a lot of ways how capital views Phoenix on a national level. And, for the majority of my career, Phoenix was not a tier one market for a lot of those institutional landlords. And it has become so. It may not be the top of the top, like a Jersey or a Lehigh Valley or an Inland Empire, but it's elevated itself far beyond what it was previously. And for my friends in Dallas, obviously, you guys are, and Chicago, I guess you guys are obviously tier one industrial markets too. Don't want to leave anybody out.
Sure. Yeah. No, it's interesting. I would say even with rents at the levels that they're at, it has to be considered a tier one industrial market with the volume of leasing that you guys doing and the rents that you're commanding. So I'm sure that's been a cool transformation that you've witnessed over your career in the market, practicing industrial real estate.
Yeah, it has definitely changed dramatically in that regard. And, it is interesting, your insight that you provided earlier as far as how we compare rent-wise to the Inland Empire. And, you asked about regionally. I was over there nearly a year ago attending one of our industrial group meetings. And, the outlook, it wasn't exactly bleak, but they didn't have, the activity to brag about that, they had for the last, as long as I can remember. They'd always had great, amazing, positive projects to talk about. So it was just a real different tune. And so then it leads to think, okay, what are the other factors beyond just the rents that impact that? And each project has got their own reason for choosing Phoenix, but it's interesting to kind of see regionally that, okay, we are not the low cost alternative to where we're trying to show monetary value and lower rent to justify the location that's 5 hours from that population base or 5.5 hours from the ports. We are seeing, at least we still do compare favorably to what's happened in Las Vegas, where industrial rents have grown even sharper.
Gotcha. Tell us a little bit about Las Vegas regionally. So rents are growing there. Do you do business up there? You have clients that have leases in the Vegas market?
Yeah, I've had the opportunity to work with our colleagues with Cushman and Wakefield in Las Vegas in the past, and Thankfully, we've had some successful projects. We've had a few that haven't worked out as well. That market is much smaller as far as just the overall breadth of the market. In Phoenix, we're, I think, roughly twice the size as far as the industrial market square footage. And, our population kind of follows the same trend. And so there's been the opportunity to find supply here that just doesn't always exist in the Las Vegas market.
Yeah. And of course, holistically, Phoenix compared to Las Vegas as a economic outlay are different. Of course, Phoenix is more balanced, and Vegas is a little bit more hospitality, or a lot more hospitality focused in terms of the economic mix there.
Yeah, they are, but they've provided a lot more resiliency as well. And that, their proximity to LA has really made them a top choice for a number of different groups looking for high quality industrial real estate, particularly up in North Vegas. But the market, at least my understanding of the market is that it's a little more land constrained than what we enjoy here, which then forces those rates on the land per square foot prices to jump significantly.
Great. Well, Josh, I appreciate your insights there. Is there anything else in and around the industrial sector that you want to share today on the episode?
Well, I don't know that anything comes real to mind. Something that we've seen here locally, and it's really a national trend, maybe just the continued growth of the 3PL world, and that the competition amongst those firms is fierce, but that they've proven an ability to really manage a lot of these distribution centers at a real high quality and at a lower cost to their customers than they can run them themselves. And so we see 3PL requirements all the time. It can be a bit tricky because sometimes you'll see 3 to 5 different groups trying to win the same contract. And that presents itself with a bit of a challenge from a landlord perspective, from a broker perspective. That's very much a national trend that I know exists, and something that will continue.
Sure. Are there any 3PL deals that you were able to get across the finish line that are particularly notable or interesting, or had kind of an unorthodox path to closing that you'd like to share?
There's been a couple of interesting ones. One, unfortunately, I didn't get to handle the renewal, but this was a really fun project from, I'm trying to think, I guess it'd be about 5 years ago. And this was for a German-based 3PL. And they were working with a manufacturer of mining components. And the requirement was for 200,000 feet indoors, but then for another 200 to 300,000 square feet of outdoor storage. Now, I'm going to assume most of our listeners here are going to be familiar with the average industrial building. And most of the time, they're designed to maximize the site coverage and the developer return. And so this was a particularly difficult project where we had to find somebody who had a large amount of trailer storage or some undeveloped land adjacent to the property that could be converted into this yard. Now, today, that might sound pretty simple because just about all of these industrial buildings that have been built spec here in the last 3 or 4 years have real abundant trailer parking. It's become a very common feature, and car parking counts have increased as well. But, 5 years ago, that just wasn't the case. And so thankfully, we were able to locate a couple of buildings for consideration. And wouldn't you know, our 2 favorite buildings were leased out from under us. And so that's where I always find enjoyment, right? Is they say everybody's got a plan, or every boxer's got a plan until they get punched in the face. And that was, whether it was a punch in the face or a punch in the gut, when your top option gets leased out from under you, it hurts. And so then it's, how do you pivot and find a great solution for that client? And ultimately, this is the beauty of 3PL, right? Is you're really working for two clients, your particular 3PL as well as their customer. And so thankfully we were able to find something. It took, 6 to 9 months to complete. And there was definitely a lot of work to be done. But even though I wasn't involved in the renewal transaction, they had changed broker providers. It was gratifying to know that here we are 5 years later and they just completed a renewal on that facility because it works that well for both parties. Thanks for asking that question.
Yeah, absolutely. No, thanks for sharing. That's an interesting story and something we can all learn from. So,
Brian, you're based in Atlanta. What are some of the things that you think of when you think of Phoenix Industrial?
when I think of Phoenix Industrial, I think of when I think of the Phoenix, when I think of Phoenix, I think of the desert. I think of sunshine. I think of solar energy. I think of power. I think of water, as you mentioned. I think of the abundance of sunshine and probably the utilization of solar energy as a form of clean energy. But then, as you mentioned, the water constraints and, how being in an environment that is arid and desert as Phoenix is, at least to the common person, we think, oh, there's maybe not enough water. But I think you mentioned something in our previous conversation about the aquifer.
Yeah. So there's a giant underground river that runs through Phoenix. And going back, I don't know, hundreds, thousands of years, going back far before Phoenix was, a city, this was the tribal grounds of some indigenous people. And they were drawn here actually because of that water and the fact that they could, turn it into really an agricultural basin. And so that water does still exist. And one of the interesting things is, as we've converted from, an agricultural hub, there's still a fair amount of agriculture as you drive around the outskirts of the Metro Phoenix area. But the rooftops actually use less water than what the crops would use. And so that's one of the things, is we're actually using less water than we did 100 years ago in the Metro Phoenix area.
Yeah, that's interesting. Is that, a function of the shift slightly away from agriculture, or just innovation and technology and being able to be much more efficient about our water usage and reusage, if you will?
Yeah, that's a great question. And I don't know the true answer, honestly. I've been told that it's the shift from agriculture, which, irrigating these fields here in an arid climate with low humidity, it uses a lot of water. But I would certainly think that some of those changes in technology play a big part of it. You also mentioned solar, and I haven't mentioned it at all so far. That is a big story here in Phoenix and in Arizona as a whole. There's a number of projects to bring renewable energy. If you drive along I-8 from really central Arizona out to San Diego, you see some large-scale solar operations. There's a large-scale project called Project Hash Knife that's a big solar facility that's being constructed now, looking to bring some of that renewable energy to the market. And we actually see that on the industrial occupancy as well, not only with a company like JA Solar recently leasing another 250,000 square feet to supplement their manufacturing facility, but we also do see it in, the 3PL world and in the warehouse and distribution market. Another 3PL project that just got finished was with one of those. The end customer was a renewable energy company that needed a place to store solar panels. And, within about, I don't know, probably less than a month from the first inclination that we'd be needing a facility, they had the keys to 500,000 square feet.
Gotcha. Yeah. And I would assume with the recent tariffs, there's a push for domestic production of solar apparatus and materials, solar panels that previously we were importing from other countries. So have you seen that in your business at all of domestic solar power companies looking for manufacturing space and storage space and otherwise?
Yeah, I've seen it less on the manufacturing side, other than the JA Solar lease that you just mentioned, who is manufacturing here. Less from tariffs and more just a trend that we saw start in the recovery from COVID, of the onshoring or nearshoring. And we're seeing that continue. And that nearshoring in particular has a big impact on, the Metro Phoenix. We're not El Paso to Juarez, but I was just looking at properties for a distribution center last week with a group that manufactures in Mexico and needs a location for their distribution point that's got proximity to Mexico, that's within the U.S. because they've got some USDA regulated products. And so Phoenix is a great home for that kind of company.
Yep. Great. Well, thanks for sharing that. We appreciate you coming on the show here today, Josh. And it's been great to catch up with you since we met back post-COVID at that first SIOR conference in Nashville. So it's great to see that you're doing well, and appreciate your time today.
Likewise, it's been a fun conversation, Brian. I appreciate it, and I look forward to seeing you again soon.
Yeah, my pleasure. Take care.